It's Sunday, the 16th of June 2019. I haven't been doing many of gold price charts for the last couple of months. I've been focusing more on the gold stocks in the last few videos I've put up. Last video I did on the gold price was in March and on the sort of macro charts. So I thought it would be a good opportunity to do a bit of a catch up since the gold price has had a bit of a run in the last couple of weeks and looks very well poised. I think the main thing I was pointing out, and nothing's really changed in the last couple of months, is that 2019 was shaping up quite to be sort of similar start to the year as 2016, when if you remember, gold had a tremendous run, and in particular, gold stocks had a very good run in that period as well. And what I was saying was that there was a bit of the pullback looked similar in that they'd had that sort of run up for the first couple of months of the year, and then it sort of moving sideways and into June and July, it had another leg up, and that's kind of what we've seen again here. It's almost to the day there. You can see the end of May came there, and then the market took off again, and it's happened again here that we've surged higher on what looks to be sort of the best gold price action for the last probably since that period, or even in the last 5 years. I would say that it looks like the gold price really wants to break higher here. And that's the difference this time as opposed to sort of 2018, 2017, when we've seen maybe those good starts to the year, is the Fed has really backtracked, and that we really have seen the end of the interest rate hiking cycle and are now moving into a different environment. And there's kind of a bit of an unknown there at what that's going to mean. That the market has now, I think even in the last video I put up in March, the market was only factoring sort of a 50% chance, say, of interest rate cuts this year, and now it's almost 100%. I'm talking about the US market here, and now I think they're factoring in almost 2 or 3 cuts is starting to come in. So, we're in a rapidly changing environment. I think that once the Fed caved in December after the stock market fell, that's really given an opportunity for everyone to start, recommending and telling them what to do, and now they're kind of beholden a little bit to the market, as we kind of knew they always were, but now it's a little bit more obvious, and now some of the macro data is also starting to weaken a little bit. But all that's positive for gold because if you're looking at generally gold will follow real interest rates, and interest rates are going to be falling in the US. And there's sort of this, no one even talks about potential for inflation or anything, but even if inflation is not that low in the US, but there's a danger that the Fed will sort of let that run. Even if it starts getting above their target, they'll start to let it run a bit more, and that means you might see negative real rates, and that's always positive for gold, or generally positive for gold. So I think that's what's generally driving this. It's not that hard to see. It's but just taken a while for the market to catch on. This was since the market sort of told the Fed what's what in December. This was always going to be the outcome, that we start to see some positive moves in gold from expectations of falling interest rates, and I think just general uncertainty. The trade stuff, I'm not sure if that's as big a deal as people make out. I think it's kind of people tend to politicize these things too much, but it's really the Fed is the main game here, and always is in the gold market, and increasingly in the stock market as well. But that sort of, there's a few little things in the market that could set this, politicize this even further and push it higher again. But I'm really focused on that Fed sort of action. It was a bit of a fairly sort of weak close to the week. Dropped. Gold was surging up to sort of above that 1350 zone, but then it got pushed down on Friday night Australian time. But I think it's definitely looking the most positive it has for a while here. It's looking a little bit overbought, and had that run from 1280 in the last 3 weeks, and it's pretty much unstoppable. But I think maybe we're seeing some consolidation here again. But I think there's some real push here, and I think it is going to break above that 1350 zone and push potentially toward the 1400. And above that, you don't really, from a trading point of view and a technicals, there's a lot of air in here above 1400. So you could see, I noticed Paul Tudor Jones was out this week sort of saying that if it goes above 1400, it could move fairly rapidly towards 1700, and that's kind of the technical picture, I guess, that air bubble in that zone you could see it move fairly quickly. And that's especially true if obviously if the macro environment deteriorates. I think he was making the point that obviously that in a rate cut cycle, gold will generally be, is sort of your gold is a rate cut 101 cycle trade. So that's and that's it's been a fairly obvious trade for the last 6 months, and it's a good time to be get set. The stock market has been surging, all year, sort of front running all these interest rate cuts that are likely coming. Um, I don't know how much of that's already factored in. I think a lot of it already. So, this is the danger that once the Fed starts, forecasting all these rate cuts and the market's expecting it, now that's already factored in. And I think this factoring in process happens a lot more quickly these days. And now, it's going to take even further rate cuts to push the market higher again. And then when you run out of bullets for rate cuts, then you start talking about quantitative easing again. And Trump's obviously very aware of all this and has been doing his best to jawbone the Fed again, and saying that the market would be another 30% higher if the Fed hadn't raised interest rates so quickly. And he's getting increasingly unhinged, and there is definitely a political danger there. But the stock market is loving it because he's on their side, I guess. But I don't know how much further fuel that can give these expectations of rate cuts. You're just going to need more and more of that, and at some point it doesn't work anymore as well if the real economy starts faltering. So this is nothing new. We're in the same situation as the last 10 years. So nothing's really changed, except now I think the expectation is we're reaching kind of an end game of this, and what happens next. We've intervened, and the real economy is still not that great in the US, despite what people want to say. The Australian dollar has been sort of a thing that I've focused on in these videos for the last couple of years now, and generally just a weaker Australian dollar I think has been the obvious trade. And I'm still looking for further weakness. I think there's a lot more downside here. Back under the sort of 70 cent. When I say 70 cents, that's been kind of the support zone for the Australian dollar for the last 5 years. We're under that, but we still haven't sort of broken decisively. We're sort of hanging on to these last sort of wicks of some of these candles and stuff. But 68.5 is kind of the line in the sand there. And there's the economic data coming out of Australia is gradually getting worse and worse. Retail sales, housing, all of these things are kind of adding up. And there's, one of the positives have been kind of iron ore, and some of the commodities have been doing reasonably well, and that's probably helped the Australian dollar in some way. But this is an extremely weak looking chart. Some people are talking about 3 interest rate cuts in Australia this year. They've already done the one at the last meeting a couple of weeks ago. But I think it's kind of rolling over, and again, it's kind of this what we're seeing now is kind of this rapid changing of expectations, and that's a good environment, I think, for traders and for people who are willing to see if people can see how things are evolving a little bit. The market doesn't necessarily factor it in, and then you're seeing these steep moves down in expectations. And I think we could see. I've said 60 cents is my forecast for the Australian dollar. In the medium, say 6 to 12 months, and I think it could go a lot further if all this interest rate cut stuff. And there's even talk about QE in Australia, which is just ridiculous. But that's how once you start going down this path, the market just wants more and more. And obviously that's helped the Australian share market as well, which I sort of thought maybe it was a potential for a short opportunity, but I sold out of that trade because now it's the same thing. We're trading on a US style sort of interest rate cuts are great for everything, and a weak dollar is great, and all this sort of stuff. But it's great for the stock market in the short term. But the thing is that those interest rate cuts are sometimes viewed by the market in isolation. But the reason they're cutting is because the economy is weak, and obviously that weakness starts to affect the companies in the index. So at some point it starts to roll over just because the profitability starts to weaken. So kind of people haven't really put 2 and 2 together. But on the chart it looks quite positive. It's these continuous moves higher. The miners are still doing pretty well. We're tending toward the top of this trend, I guess, back towards sort of the old high around 7,000. So that's probably where it could head in the near term. But if the US market rolls over, the Australian market will roll over as well. But it's definitely looking positive. But as I said, I think it's all about that move in the real economy, which is it's happening. Like there you see every couple of days there are announcements on the ASX from just companies like Wesfarmers, for example. There was an update last week I read on Kmart and Target sales and all these sort of things that it's starting to filter through, and it's not no longer kind of an idea. It's actually real for a lot of these companies. So at some point that's starts to actually appear on the charts and whatever. But while everyone's just focused on interest rate cuts, it doesn't really matter as much. So all that, obviously, when I talk about the currency again, the gold, Australian dollar gold price has been something I've focused on as well, and that's reached an all-time high again this week. Massive surge. Once it's broken out above this previous high, about the sort of 1880 level, it surged so quickly up toward 1950, and as I've been pointing out, my target, I can't remember when I put this out in one of these videos, but it was probably 18 months ago. I was sort of calling for a $2,000 gold price in 18 months. So we're in that period now, and we're getting close to that target. But I don't think that's we're only kind of at the start of this for me. As I said, I think the Australian dollar can fall a lot further at a time when US dollar gold looks, that the fundamentals and the technical action looks the best it has for the last 5 years. So that in that environment, I think you might head toward this upper bound here of this range about 2200. So that's where I think you could go, and it won't take long if things, as I've sort of was trying to point out in some of these similar moves here, it moves very quickly, the Australian dollar gold price, when the macro environment changes. So that's what we've had. We've had that surge from 1850 to 1950 extremely quickly. So I'm hoping that continues, and then it starts to filter down to some of the lower end of the stock and the more marginal companies as well. So I don't think the market's still. No one really even talks about the Australian dollar gold price in Australia. It's not. This trade is still not that common, and I guess some of the stocks. We've seen a lot of moves in the mid-tier stocks, but the small cap end of the market hasn't really moved at all and is very, very stagnant. So hopefully that starts to filter down as well, and I think it will. It's only, the problem has been in Australia, some of the companies not actually delivering on expectations, which I'll talk about in another video on the stock specifically. But that all looks very positive for the Australian dollar gold stocks and for gold stocks in general in Australia. So all in all, it looks very well set up on the gold market, and I think this rapidly changing sort of macro environment is extremely positive for gold, and I think just this is the time to be watching and to sort of, if in that small end of the market in particular, there's opportunities there that will move very quickly if circumstances start to play out as it looks like they might, with a rapidly sort of decelerating global economy, US and Australia as well. So I think that's very well poised here, and probably the best it's looked for some time. And as I said, I'll do another video on the gold stock specifically.